Namaskar dosto, welcome back to Dhwaj Stock Info. In our episode 17 today, we are going to discuss one important subject, how to build a stock watch list from 5000 listed stocks to your just best 20 stocks using Screener.one for free. Last week, FIS, the big foreign institutional investors, sold 21,000 crores worth of Indian stocks, but the same week, DIIs, the domestic institutional investors, bought 16,000 crores in one single day. When Nifty was falling, when most retail investors were watching prices decline and worrying, the DIIs just calmly bought 16,000 worth of quality stocks. Do you know why they were so calm? Because they had done their homework, they had the list of quality companies ready, the price had come to their target level, and they simply bought that list of pre-analyzed quality stocks waiting for the right price is called watch list. Yes, watch list. And in episode 17 today, I show you exactly how to build one using everything we have learned together in this series. In 30 minutes, completely free on the Screener.in, India has over 5,000 listed stocks. After running the 9-check FA system, you will have 20 quality candidates, your watch list ready to use just like the DIIs. Why? Watch list beats random buying. The emotional cost of buying without analysis is the subject now. Most retail investors in India buy stocks one of two ways. Way one, the tip from a friend or a WhatsApp group. Buy the stocks, it will double. Way two, the news headlines about the company reporting a good result, they buy immediately at the peak of the excitement. Both approaches share the same fatal flaw. No analysis done before the buy decision. The price is whatever, wherever it is, the quality is unknown. The watch list completely changed this. You do the analysis first. When you are calm, you identify the quality companies using 9 FA checks we have built. You set the target price zone using PE and PB ratio benchmarks, and then you wait. You wait until the price comes to you. Not you are chasing the price. When the Nifty corrects like it has since January, your watch list companies come to your target zone and you buy with complete conviction because you already know the quality, the homework done. The DIIs bought 16,000 crores with that tough a conviction. Now you can also just do it. Yes. Section 3. Now in this 5-step watch list building system, introduction to 5-step watch list building system, screenshot this framework. Here is the complete 5-step watch list building system. I will walk through each step with you live on the Screener.in. This entire process takes 30 minutes. You will have your personal quality watch list by the end. Screenshot this framework. Now I will show you how to see the stocks under Screener.in. Open Screener.in. Type Screener.in in any Google browser. This screen will appear. Then click on the screens. Then create a new screen query. Here you have to write a query. The first thing is the filter number 1 is sales growth. Here sales growth for 5 years. It should be greater than 15% always. Greater than 15%. This is the first filter, and this removes every company that has not grown revenue consistently. Then filter 2 is a return on capital employed. Return on capital employed. This should be greater than 15%. From chart 38, this ensures that the business earns well on all the capital. Then the filter number 3, debt to equity ratio. Debt to equity should be always lesser than 1.0. And from chart 21, balance sheet safety. Filter number 4, operating cash flow. Operating cash flow for the last 3 years. Operating cash flow for the last 3 years should be positive. That is greater than 0. You have to put greater than 0. From chart 22 and episode 14, the profit must be real. Then the final filter is, then the final promoter holding, this should be greater than 40%. This should be greater than 40%. So when you run this query, you will get so many companies. See here, it has given you 435 companies. 435 companies from the list of 5,000 and odd companies listed in BSE. It has reduced to 4,500 companies. You have just eliminated almost 90% of the listed stocks using 30 years of knowledge, FA knowledge. Like this, you have to find out various companies for our watch list purpose. I am going to explain some more after this. Please practice this. Step 2. Step 2 is coming. Applying the multi-bagger filter from episode 16 to your 490 candidates. This narrows down the true quality, the 20 stocks worthy of your watch list always. Now under step 2, the multi-bagger quality filter. Apply episode 16 multi-bagger lens to the filtered list. Here, from 80 to 120 candidates, we now apply to the episode 16 multi-bagger filter. Go through each company. Check 2 additional things. First is the EBITDA margin expanding. Then the next is from episode 16 characteristics 2. Profit is growing faster than the revenue is the most powerful signal. Open profit and loss tab. Look for EBITDA margin for 5 years. Is it going up constantly? Is it going up consistently? Second is the ROE above 20% for 5 consecutive years from episode 16 characteristic 3 and chart 20. These 2 additional checks will narrow your 80 to 120 candidates down to perhaps 30 to 40 genuinely high quality companies. The ones showing expanding margin and consistent high ROE are the companies that the DII target when markets fall. These are the stocks you want on your watch list. Then in the step 3, the valuation check. Find the price zone, the most practical section. Setting price target using P and PB. You have 30 to 40 quality stock companies. Now the most important step is valuation. The quality company at the wrong price is still a bad investment. From chart 24 PE ratio, from chart 25 price to book ratio. For each company, go to the ratio tab on the screen.in. Find 5 years median PE ratio. This is the ratio price that the market has historically been willing to pay for the company's earnings. If the current PE is below the 5 years median, the stock is historically cheap relatively to its own history. This is your buy zone. Do the same with the price to book also. Current PB versus 5-year median PB. A company trading below its own historical median valuation while showing quality fundamentals is exactly the opportunity a watch list captures. Write down the buy zone for each of your 30 to 40 quality companies. The Nifty correction since January has brought many quality IT stocks like Tech Mahindra, Infosys below their median valuations. That is why IT rose sharply yesterday. DIIs had their watch list and their price zones ready for the situation. Then in the steps 4, build the watch list table in your personal record. This will help you a lot always. Now we'll build the actual watch list for each of your 20 best quality companies. Create a simple 6-column record. Column number 1, company name and sector. Then in the column number 2, quality score. How many of the 9 FA checks done it pass? How many 80 FA checks does it pass? Then the column number 3, current PE and the PB ratio from screener.in. Column number 4, 5 years median PE and PB, your benchmark. Column number 5, your buy zone, price range. Column number 6, watch trigger. What development would make the investigate more deeply. This table is your personal investing command center. You review it once a week. You update it You update it once a quarter after the result. When the market falls, you open this table first. Not social media, not WhatsApp group, not table. Your analysis, your conviction. I am going to show you how to build this table for 3 example companies live in screener.in right now. Now in the step 5, the quarterly review system. This is the process that separates investor who would build the wealth from those who just buy and hope. The most important 2 minutes in the episode. Next, step number 5, the quarterly review, keeping your watch list fresh always. This is a very important for us. The habit that makes watch it work quarterly, results review. Then what you have to do is the next step. The watch list without a review system is just a list. The quarterly result season, like the quarter 4 financial year 2026 season we are right now, is your review trigger. Every 3 months for each company on your watch list, run 4 quick checks. Check number 1, did the revenue grow versus the same quarter last year? Is the trend is continuing? Then check number 2, did margins improve or deteriorate? Check number 3, is the operating cash flow still above the net profit? Then check 4, did promoter holding change? Any pledging? These 4 checks take 10 minutes per company on screener.in for a 20 stock watch list. That is about 3 hours every quarter. One Sunday afternoon every 3 months. That investment of time is what separates the investor who builds wealth slowly and surely from the investor who buys on the tips and wonders why nothing is working. Remove companies from your watch list if they fail step 1, or step 2, consistently add new companies when the screener filter finds them. Your watch list is a living document, not a static list always. Then in the next section, when to buy from your watch list? That is the important question. The most actionable section, 3 clear buy triggers. Your watch list is ready, your buy zone are defined. Now when exactly do you investigate more seriously? 3 triggers. Trigger number 1, the stock prices enter your buy zone. Current PE falls below your 5 years median target. This is the most common trigger during the market correction. Nifty fell 11% from its all-time high. Many quality IT stocks entered their buy zone in Q1 2026. Trigger number 2, the positive quarterly result that confirms the quality story. Revenue growth accelerating, margins expanding, OCF above PAT. When the fundamentals improve while the price is in the buy zone, conviction goes from strong to maximum. Then trigger number 3, a sectoral tailwind. When your well-analyzed IT company is suddenly benefiting from AI spending or cloud adoption, and this shows in the revenue line. The watch list makes you ready for all the 3 triggers. Without a watch list, by the time of your research, a stock after a trigger, the price has already moved. The DIIs had their watch list ready. That is why they bought rupees 16,764 crores in one day. Now you have the same system. Now in the next section I'll tell you your 30 minutes watch list action plan for today. Inspiring, close, the most empowering episode ending in this series. Your action plan for today. Step 1, open screener.in stock screener. Apply 5 quality filters I showed you. Then sales growth above 15%, ROCE above 15%, and debt to equity below 1.0. Operating cash flow should be positive. Then promoter stake above 40% always. Note how many companies pass this. Step 2, check EBITDA margin, trend and ROE for the next filtered list. Keep only companies where both are strong for 5 years. Step 3, for you best 20 candidates, check current PE and PB versus 5 years median. Note your buy zone. Step 4, build your watch list stable company. Quality score, current valuation, buy zone, watch triggers. Step 5, review this table every quarter result season. Comment below and tell me how many companies passed your filter, which sector had the most quality companies, and I reply to every comment every day. I follow because episode 18 is coming now, and it is still, and it will teach you how to read an annual report, the original source document behind every number you see on the screener.in. Please subscribe, please like, please share with your family and friends. Please support me to bring more such informative videos to enhance your knowledge. Thanks for watching.